Doug, welcome. Coaching session number 3. Um, Today, tell me what you want to do, but I think you sent me a draft confidential information memorandum, which is like a pitch deck with a narrative for people, and you sent me an update to the cash flow. Is that what you want to review, and what else do you want to cover today?
I just want to move this along to the next step. So yes, that is,
Yep.
I want to finalize those two documents and then find out what your suggestions are going from there.
So I'm not going to put your confidential information memorandum, which we'll call a CIM for shortness in an acronym. I'm not going to put that on screen because I don't think the audience needs to see that at all. But I will talk about it. So just to remind you and everybody, the format that I asked you to think about last coaching session, you've done that precisely, which is an opportunity section. And the opportunity is 1.5 pages of what you're asking an investor to do. And it kind of replaces an executive summary, like here's the exciting opportunity, here's some of the risks, here's what I want you to invest in, and sort of the general terms about that. Okay. And I didn't, in the time that we have, I didn't do a thorough read on the rest of it, but I did focus on that a lot in my prep for you, and the cash flow opportunity section, something about the business for a couple of pages, markets and customers for a couple of pages, management for a couple of pages, financial for a couple of pages. And if you don't, in the financial section, I don't know that you did this, Doug, but I don't think you did. But when you talk about the structure and summary, hey, investor, I want this amount of money from you for this period of time. Here's your rate of return. Here's how you exit. More detail goes into the financial section.
Okay.
Right. So you should be summarizing that. Anyways, all of that to say, and that's kind of a recap from the last time. You did exactly that. And to me, this has got a little bit to go, but it's way better. And I'm bullish, Doug, because I see a business coming together here. I know that business always existed in your head, but I think it's coming out on paper that, as someone from the outside, it's starting to look, oh, well, that's kind of interesting, right? From my perspective. Doug, do you ever use, before I get into the details, do you ever use AI for anything?
I've done machine learning, which kind of
Yeah.
leads into AI, and I've done that in, my full-time positions in the past. So I know something of it, but not really gone into AI itself yet.
Okay. I want to show you what I did for your benefit and for everybody's benefit here. Let's see if this works. There we go. So this is my chat GPT. And what I did is I just uploaded your CIM right there. All you have to do is hit that file button. And this is relatively cheap or free, this service. And it read it in about 10 seconds. And it gave you a number of recommendations, all of which I agree with. I think all of which. So it tells you the strengths of yours. Says some sections, particularly in the financials and market opportunities, could benefit from more concise language, redundancy, like it repeats itself a little bit here and there. Okay, this is such an incredible tool, Doug, for doing everything in writing. It's really fantastic, and I will also tell you, I use this all the time. So if you're too tired, it's late at night, or you're just like overwhelmed with something and you're just putting thoughts on paper as opposed to editing and getting a clear narrative down in good English. Um, I literally take multiple paragraphs at a time and I just cut and paste it into here and it rewrites it clearly for you.
Oh,
And
oh
it,
wow.
it honestly, Doug, you could finish this CIM this afternoon if you were using this tool. It's fantastic. Um, Opportunity session, consider expanding on the exit strategy for investors. That's dead on. We're going to talk about that in more detail. Okay,
Okay.
business description, like you can go through all that, and if you want, I'll cut and paste this for you and send it to you separately offline here. I don't. We don't need to spend clarify how the market size translates into market opportunities. Yeah, exactly. Okay, so the point, Doug, here is that took me roughly 17 seconds, as I said, in total. And It answers the questions, maybe not as well as me, but pretty damn quick, and it's free. I would ignore the CTA at the end. I don't think that's important. Okay,
Okay,
but that is a tool that you and everybody should be using. Isn't that cool?
it is. I mean, I've used not chat. I haven't used Chat GPT yet, but I've used similar tools. And yeah, you're right. It protects you from bad grammar. So yeah, it looks like a great tool.
Yeah.
I will use it.
And the comments, I like seriously, you could just take a whole section. You could just take your market section and you could paste it into there and say, hey, rewrite this more clearly for me.
Right.
And it will instantly. And then you have to be careful because it lies and it makes up shit. So you need to not be reliant on it,
Okay.
but it'll save you days. When I used to write CIMs back in the day, like I would be doing multiple a week, like finishing you get 80% kind of done right away, but that last 20% and then the last 2%, it takes days of painful, like, because you can't put out something for a client that has a typo in it or a
Right.
mathematical error or what
Exactly.
have you, right?
You,
You don't want to be doing that. So that's pretty cool. Now, in the opportunity section, you've got one comment here that says our profit margins are huge. This is your point number 4.
yes.
Cost of goods sold is approximately 21% of the sales price. I think at the core of your business plan, CIM pitch, you need to answer why. That's not a very realistic, maintainable margin. And so why? And the answer might be because you have the patent pending and the proprietary IP. So, our margin per unit is way up because we spent a bunch of money and time upfront developing the IP. It might be because of our customer relationships, which means that eventually prices are going to come down because relationships don't last forever in terms of people overpaying, so to speak, at huge margins. But there has to be a why to that. Can you answer that question?
Yeah, I can. Do I put it? I'll answer the question for you. Is that something you're going to want me to put in point number 4? Is the
I
background?
think that your opportunities part of the confidential information memorandum. There should be no new information in there. It should be a summarized narrative pulling out from the rest of the document. Okay. So you shouldn't say in here, oh, we've got a patent, but then never talk about a patent somewhere else in the CIM. You should, the CIM should talk about the assets you have, your intellectual property. And then the story is, hey, we got a patent, see page 6. And because of that, our margins are really high. See the financial section. And we expect that's going to continue for the foreseeable future for whatever reason. Like there's your narrative in the opportunity section, drawing on the facts from the body of the document. I mean, it's only a 12-page document. It's not like somebody needs to go through 200 pages to find this. It's pretty
Right.
simple.
Yeah.
That
So
which was the point.
we have a patent pending. We're the first one
Yeah.
in. And I'm working with a patent attorney to get that finalized, to get, a patent, get it
Yeah.
approved. So that is one of the positive factors. One of the other factors is we have focused on the technology so that it can be easily, it's modular in nature. It is going to be easily, we can stand up new products as a result.
Yep.
On other frequencies. We have what I've been referring to as a captive market, and that by that I mean there are no other real competitors for a tool that provides the search and rescue community these functionalities at the price that we have done. We've also we've given a discount to nonprofits in our pricing.
Can I interrupt you then? So what you're saying is you got these huge margins, yet you're already charging way below what other competitors are charging, and you're able to do both of those things simultaneously because of your IP.
That's correct.
That's your message.
Okay. All right.
Okay.
And
And that it's
that's boiled
as
down.
As Warren Buffett would say, it's a moat. Like nobody can cross that moat and
Right.
attack your castle because
Oh,
you've got the patent and it's going to last for the foreseeable future. Maybe not 25 years of the patent, but 5 to 7 years before anybody
yes.
can figure this
Yes.
out.
And the other issue was the last tool that it was the standard in the industry, the Elper.
Yeah.
They're no longer in production and their units are falling apart. So there is a big need right now. Right.
Okay. Well, I'm going to come back to that point because I have two main things I want to talk about in this opportunity section beyond what we just spoke about. Um, can we move to the cash flow first, though? You okay with that?
Yeah, let me bring that up. So I'm looking at it well. Go ahead.
Well, I'll share as well.
Also, on the cash flow, Scott, before we start on there, I was thinking you mentioned that, the last statement I got from you was, why do you, why do you need $1 million? Because the cash flow is so positive. And I was thinking about that, and I was thinking maybe what I need to do is cut the sales per unit in half, which would still be a viable, I believe, a viable thing to do. We were kind of pushing it at 10, 5 a week, and then I think that would help, correct?
Well, wait a minute. Let's not talk about. Hold that thought and let's come back to it. Okay.
Okay, all right.
The first thing I want to say here is get rid of these two tabs because they continue just to be confusing. All you have to do is go like this, delete.
Okay. All right.
Okay. I don't want to do it in case you've got links in there because then you'll just get a bunch
Well,
of.
I'm going to keep a copy of this and I can
Yeah.
refer back to it. So
Yeah, but you don't need a bunch of tabs on this. So my point is, assuming you're okay with the numbers, you used to have 500,000 in there, and I
yeah,
just put it to zero for this purpose because now I can see how much money I really need, as opposed to what you had in what you sent me is you had 500,000 there, but you were never really spending much of it.
okay,
And
all right, gotcha.
okay,
That makes
so an investor is going to go like, why do you need my 500,000? So I put that to zero, and you also had about 50,000 opening cash. But is that true? Was there going to be opening cash?
no, there isn't. That was just
So I
me.
put
Yeah,
that to zero. And now here's my closing cash negatives. Now I don't. There's my closing cash negatives, right? In weeks 1, 2, 3, 4, 5. And by week 6, I'm positive without any money. And my maximum problem is there. Okay. So according to these numbers, not necessarily reality, Doug, but according to these numbers, you really need $50,000 to make this thing work because you're cash positive for the rest of your life after that.
ouch.
Why is that an ouch? I mean, this is huge news. I think that's so positive. Now, you may say to me, well, that's high risk. If I only have 50 grand, what happens if my billings aren't this from day one?
Right.
Well, that's okay. That's okay. That's why we bid this model. So let's just say, pretend for a while, this is $10,000. Okay. And then up to 35. Well, now your biggest shortfall is
88.
here.
Next one over.
Yeah. Here. Yeah. Okay. So in the opportunity section of the CIM, you're still asking for $1.5 million or something. Well, whatever, $1 million. You're contributing some of that as well. Maybe it was 1.25, as I recall, something like that. And then later in this model, we asked for $500,000 that I zeroed out up here. But in reality, even if we drop down revenue, we only need 100 grand to make this thing work. And you should see that as a positive. Now, I'm not saying that's the right answer again. What I'm saying is do not manipulate your billings to drive this number up. Just be comfortable as best you can. and then do a little sensitivity around that. Does that make sense?
Yeah, it does.
Okay. What if you only need 100 grand or 150 or $200,000 to be safe? What if that was the case? That doesn't that just entirely change your distribution as to who you might get this financing from?
Yeah, it does.
I think it does.
But I'm just staring at, a financial abyss here on my personal side. So you'll have to
No, I get
forgive
that,
me for
but
that.
you're
It's kind of
you're actually
driving. Yeah.
taking a paycheck out of this, like, so it solves that problem as
Oh,
like
you're
you've already
correct.
accounted for that in here,
Okay. All right. So what you're saying,
correct?
I get it, is this is more accurate, and it also increases, probably, if you correct me if I'm wrong, what I'm reading into this, increases the opportunities for funding.
I think it changes them dramatically, Doug. I I really do. Now, here's the other thing I noted. If I scroll across here, if I take a random month, which I think in this case I took December, and as you've probably learned when you do these sort of weekly models, the patterns just repeat themselves forever, right?
Correct. Yeah.
Okay, and so this month is the same as January, is the same as November. It doesn't really matter. I don't think you've accounted for sensitivity um, in terms of Christmas. Like, we wind down for 2 weeks and we don't get going until February. You should
Correct.
probably adjust your model for that. But the bottom line is your free cash per month, normalized, if I can put it that way, is $87,000 according to this model. So if you only needed 100 grand, you're spitting out 87 in free cash per month really quickly. How does that not create a prospect of a real business and an exciting investment opportunity for somebody? I think it really does.
Okay. All
Okay.
right.
And we're going to talk
Yeah, I
about
just
structure on that for a minute. But that's so what you need to do is don't understate your costs to try to entice people on positive cash flow. Be comfortable with your costs. Don't overstate your costs so that you're trying to raise more money that you don't really need. That's
right.
also a mistake because more money is hugely expensive. Okay. And the more money you need to raise, the more difficult this becomes. And similarly on revenue, don't overstate your revenue to try and make this look rosy, and don't understate it to try to raise more money because you need more money. Just do what you think is best. Have a little sensitivity in there to be conservative. And if the number is 50 grand or 100 grand or 150 grand or 200 grand, like, that's just a different sale than trying to raise $1 million. It just is.
Okay. Yeah. And to be honest with you, I have and I even that, my statement about moving the units per week to 5. I've been trying to be as honest about the scenario as possible. Costs
Yep.
are as accurate as I can make them right now. The only thing I have to add in is insurance. And right now I'm having somewhat of a difficulty of getting a quote for the different insurances for my type of business. I've got 2 companies that
Insurance, well, for every business, Doug, insurance is just
difficult.
gone in the toilet worldwide.
But
It's not just you.
if I had to guess at insurance for what we've talked about, what would you think would be a good number to put in there for purposes until I can get an
I don't know.
No idea?
I don't know. I don't know the liability risk from an insurer's perspective on your product.
Okay.
And so you need to ask somebody.
Yeah, and I'm trying.
But even if it was outrageous, that's not an upfront expense. Well, 50% of it might be, but it's probably not an upfront expense that's going to change your capital raising need materially. It's probably not. It may, even if it's an outrageous premium, it's going to suck out of the regular cash flows going forward, but it's not going to hugely change what we're talking about here.
Okay, great. All right.
Okay.
One other question for you.
Mhm.
The agreement hammered out with my manufacturer, who's the biggest
Yep.
somebody I need to pay for the technology rights, is going to be a monthly payment. Do I consider that as a loan payment? Because it's monthly in nature.
Is it a loan, or is it just a like a uh, licensing fee?
Eh, we've talked about it. He basically it's functioned as a loan, a bank for us, right?
Okay.
As we've gone
Well,
through the process.
so regardless, you need a line item in your weekly cash flow for him, and whether that's the loan payment or a licensing fee, it's the same cash flow. And so you need to make sure that's coming out of your cash flow at the right times, because that will also reduce your cash flow. And if it's structured as a licensing fee, it will reduce your cost of goods sold in that opportunity section and in your financial section. If it's a loan, like there has to be a loan on the balance sheet, and I doubt that's the case. Like they're not writing you a check.
This,
Um,
yeah. Okay, so geez. Uh Either way, like you said, there has to be a line item. What would I call that line item?
um, well, it depends a little bit on the structure. Uh, I would call it a license fee, but you could just call it payment to supplier rights payment or something along those lines. And you could make a note in the notes section as to what that means as
How
you
about
currently
how
understand it.
about payment to technology rights? Would that
Perfect.
okay.
Yep.
For technology rights. Okay. All right.
Yep. Okay.
Okay.
So let's just pick a number. Let's say you need 200 grand, although it doesn't show that. Can we say
Yeah.
that? Now,
That's
what
fine.
are your options to get $200,000? Actually, before we get there, if I go back to the opportunity section into your CIM, one thing that I'm not fully understanding, if I were to put myself in the shoes of a prospective investor, I'm like, oh, you've got my interest now. You didn't really have my interest when we started this 3-4 weeks ago. I wasn't really sure what this is, and I knew intuitively you didn't need $1.25 million,
Okay.
and I
All
didn't
right.
know what value you were bringing for that. But I thought, well, we'll go through the process and see what
I
happens.
wasn't,
Well,
to be honest, I wasn't factoring in the cash flow. I mean, I was just looking at the
yeah,
total costs, and this is what I need to cover those costs. So
100%.
yeah,
Yeah, but that's why we go through this process, and it's been enlightening, I hope,
yeah,
for you. So so what I need you to focus on more in this CIM and in general is immediacy. The immediacy of, you know what, I can sell my first unit to XYZ, and I can do it September 12th, right?
right.
Now, you may not have that information, but as close as you can get to that, because the actual transaction, the sale of a unit, is proof of concept for everybody on this deal.
Okay.
Okay. And if it's September 12th, great. If it's November 30th, that is what it is. But are you reconciling that reality with what you've put in your cash flow? Because what your cash flow says is you're selling day one on.
Right. And I was thinking about that too. Now the truth is, when I'm talking about this cash flow, I'm talking about the hardened production ready version. We've already made sales on the prototype version.
I understand.
Okay.
I
Just
understand.
all right.
I'm just saying, I'm not saying you don't have the answer. I'm saying in this document, if I'm a prospective investor looking through this opportunity, what's going through my head at this point, because now I understand it, what's going through my head is, yeah, but he hasn't sold one. When does that happen? Like, what am I really funding here? Because I want to know, like, if it's September 12th and maybe you don't need all my money right away, like until I see a proof of concept, maybe you do, maybe you don't. What's my risk? How long does that take before that risk is mitigated and I can see this proof? You know what I mean? Like there's real, if I have to wait till November or early 2024 for proof of concept, that's a different deal than if I have to wait 15 days for proof of concept.
So let me ask you this. Do I put in there what the statement, the paragraph I just stated to you? We've already sold units that are considered prototypes. This cash flow is based on selling a production hardened version. We intend to have that done by this date, and we intend to make our first sale.
Yeah. Yeah. And then you make sure the math of that is in that cash flow.
into the cash flow. Okay. All right.
Okay. So in an opportunity section, you want to tell the the recipient of this document what you're trying to sell them exactly. What is the structure of this investment? And you hadn't got there yet, which is good, which is okay, because you also didn't have you put the amount, if I look up here,
1.25. Yeah.
somewhere, yeah. Company's 1.25 million. I'm personally putting in 250. So if that number is only, again, we're making up a number, say 200,000, I think it changes your structure and it changes your distribution. In other words, who is a likely target for this? And to me, I'm going to talk about you doing it yourself in a minute. But to me, if you're going to third parties for money and it's that amount of money, you're dealing with an angel network, and an angel network from your local community.
You're talking about 1.25, correct?
No, I'm talking about if it's 200,000.
Got it. Go ahead.
Okay. This is just a high net worth individual or two, like 100 grand each, 75 grand each, and you're done. And I think your likely target on this is an angel community investment from wherever you are. Every city has a local angel group, formally or informally. And I can tell you ways, we won't do it live here, but I can tell you ways to go find those people. And it's really not hard to do. And I think that's what you're going to sell to here. And you need to come up with a structure for them. And the structure options are debt, equity, or somewhere in between. And if it's, something quasi mix, and if it's equity, then you have a partner forever until you buy them out. And you need a shareholders agreement. You've already got 2 other partners, I think, correct?
That's correct.
And
actually 3. Yeah.
Right. And then you get into this valuation, like for 200 grand, how much equity are we giving up? And what is the compensation this person gets? So I'm not a big fan of equity for that amount of money. I think on the other hand, I'm not a big fan of just debt. Like, here's a term loan for $200,000. We'll pay you 10% per annum. Like, who cares? Nobody wants to take that risk for that amount of money. I would urge you to consider, this is not a recommendation, just so you need to think about debt versus equity and what you're willing to accept from your perspective, you and your partners, for this money. But if it were me, I would think hard about venture debt or a royalty program. So you lend us $200,000, you can be first secured. You can, so you're secured over the assets. We'll pay you X% a year. I'm just make up an interest rate that you think you're comfortable with. Don't be cheap about it. And on top of that, we'll pay you X% in royalties for whatever, like 3 years, month by month, just X% of the royalties. And off the top of my head, I just did a little whiteboarding, so not really off the top of my head, but without figuring in compounding, which would make it better. But if you were to give 10% up at the numbers that you're forecasting right now, you could cash flow it 10% royalties plus interest, plus they get their money back in a year. It's like 100% ROI annually over a 3-year term from an investor's perspective, and you haven't given up any equity, and you can afford it.
Okay. All right. Let's talk about royalties for a second.
Sure.
Once again, we're going back to my newbie status and a lot of stuff.
Mm-hmm.
Can you explain that in detail? What does that mean?
Sure. I did. Sorry, what was your weekly revenue target again? Just looking here. So 35,000, so $140,000 a month in revenue.
Yes.
10% royalty, you pay out $14,000 to the royalty holder.
Based on the revenue. Okay.
Yeah, there's a million nuances in how you can do that, but for simple terms, I'm not suggesting a 10% royalty, but if it were a 10% royalty on revenue, on sales, that's what you would do. I collect my money, I split out.
Will we pay it monthly or pay it
You
annually?
can pay it on any frequency you want. If I were the investor, I would like monthly,
Okay.
um, because now I don't have to wait around for Doug for a year and hope that he's still alive to pay me my check and that
Well,
he didn't scoop all the money,
that's fine. That's what we would do then.
right? And so again, this is just a suggestion, but you ever watch Shark Tank? They're proposing royalty deals all the time with bells and whistles and kickers. You have, according to your model, a great cash flowing company, and you don't need a lot of money up front, according to your cash flow, unless that changes as you fine tune it. And you could structure that sort of deal and not take on a partner forever.
Okay.
Just an idea.
That sounds great. I like that.
Okay. Now, if you like that idea and you want to structure it, you're going to talk to your partners, obviously. But if you are, then you're going to put that structure into the cash flow because that's what you're proposing. And
So,
now,
so we'd have to have a line item for royalties and
yeah,
all, yeah.
exactly. And state your assumption. Now it's built into the model. And as an angel investor, I could look at that and I could say, oh, look at that. There's me getting paid out every month. And
Okay.
makes things a bit better, right?
Right.
Okay. What else do I have here? Debt equity, how much, when exit? Yeah, okay. So we talked about that. Can I move on to some other topics? Do you mind?
Yes. No, go ahead.
So we did the CIM review, the opportunity section review. I introduced you to Chat GPT. I'm sure other AIs do the same thing. That just happens to be what we use here internally. Your cash flow and needs, royalty we talked about.
Oh, Scott, let me jump in
Yep.
real quick. Do I, my opportunity section, do I change it to focus on this approach with royalties? Is that?
Yeah, if that's what you decide, you
Okay.
should stay specifically in greater detail in the financing section, but summarize in the opportunity section. Look at what is your 30-second elevator pitch or your 3-minute pitch on this deal? Here's the problem I'm trying to solve. My advantage. Why me? Why Doug? Because I've got experience. I've sold this before. I've got the IP, and because I've got all that, my margins are huge, and we know the customer base. We're ready to go. We can execute by September 12th, and I've got such great cash flow. All I need is this little bit of money, this 200 grand, and I can give you 100% rate on return with the royalty structure. You can have security, you can get an interest, and you can get royalties on top of that. All in, it's a 100% ROI. I'm making up the numbers on an annualized basis. You're out for 3 years, and your risk is not very much. That's your pitch. That's what your opportunity section should say. It should say that we're good quality people. We got lots of integrity. That's what it should say.
Okay. All right. Sounds good.
All right. You said before we got on that you've had some good news and progress in the business.
Correct.
Okay. I want you to think about whatever your community, your geographical community is from a city perspective, right? So if you walk, I can walk into pretty much any city in the world, and if I don't know anybody, I can go to some of the top lawyers or the accounting firms or the corporate finance group, and I can say, like, where's the investment community around here? I got the best deal ever. I want to talk to them, to a securities lawyer, and they'll know that there's a community, and you'll have your package ready. Okay. You want to start building that database right now. What you don't want to do is have this CIM and cash flow ready to go, and then it takes you 4 weeks to go find your community
Yes.
to send it to, right? And so you want to start that now. And one way to start doing it now is to start building some social on about your new business, right? You could release and do kind of regular press releases on that to the community, however you might find out how to do that for free. I don't mean literal press releases, but getting news out regularly about, we started this company, coming soon. We got the best technology for this. We'll be raising capital soon. This is not an offering. We're just telling you we're going to be raising capital soon. Oh, huge win this week on what you told me beforehand, and start creating a little noise about you and your business. And what that'll help you do, if you're sending that to the right people, is you'll start building that community. So when you're ready to go on this in a couple of weeks or a week, you start to sell in late August. But right after Labor Day, you'll have hopefully a little list of people you can send it to and start discussions with.
Okay. I'm probably going to push the date out to October.
That's fine. Whatever the date is, I'm just saying, even if it's October, you should start building your community now.
Yes, I agree.
Okay, so you have a list ready. And I think those were my points on that. Now, well, two other things I wanted to say. One is, when your cash flow is ready, I'll offer you as a coaching session that you don't have to participate in, but I'll get my VP to audit that cash flow for you.
Okay.
And then I'll get him on screen and I'll just ask him what he thought and the errors and how it could be fixed easily. And then I'll give you the benefit of that. Does that work for you?
Yes, it does.
Okay. And lastly,
can I be a part of that? I'd be
totally.
At that point, I'd be so excited. I just want to be part of that. Okay.
Sure. I wasn't trying to exclude you. I just
okay.
I wanted to focus on him.
I can just
comments
I won't say anything. I just want to listen. Okay.
Okay. If the number is 200, if the number is 150, you can do that all by yourself with a private lender on a second mortgage on your home and not have to pay out 100% ROI per annum and move this business forward self-funded. You were going to put up your home as security anyways. That's part of your pitch to the angel investor. You get security. Also, I'm guaranteeing it. Well, if you're guaranteeing it, why not just pay the whatever a private mortgage second lender is in your community, 10, 12%, whatever that is, and that's your whole cost of capital, right? So you don't have to answer that live. I'm just telling you, that's the way the numbers are looking. That's what I'd be doing if I were you, but that's a risk threshold you're going to talk to your family about and all those sorts of things. But we talked about skin in the game, and you've already offered up security on your private assets based on your house. If the number is you could just suck that money out in your house anyways, then why bring in the third party at all?
Okay.
Something to think about.
Olivia and I will talk through that and
figure
if we can do that. While we're on that topic, since I'm looking for only an investment of 150 to 200, do I need to take out I am personally putting in $250,000? Does that?
No.
Okay.
No, I think that's still fair. So if it's two, again, I was using 200 as a number. Like what your model says is 80 grand. But if it's 200, then the capital raise is actually 450, but you're contributing 250 of that, if that was the number, as I recall.
Yes, it was.
Yeah.
Okay. All right.
And if you wanted to on your cash flow, you could show that is an in and an out. If you wanted to, purchase of technology 250 on the out and contribution by Doug on the in 250.
Okay.
And that would show it in black and white if you wanted to do that.
I'm sorry, say that once more. I got distracted.
If you want to show in the cash flow model itself this contribution by yourself, you could do that in week one by showing on the in cash in contribution by shareholder Doug 250,000, and then on the out acquisition of whatever IP from Doug 250,000.
Zeros it out.
So it zeros out, but you're showing, and you can create a note around that this is that transaction and that you've actually contributed something.
Okay, I'll add that. I'll add that in.
Yeah. Okay.
Okay.
Anything else for this session?
You've given me a ton of meat to work off of, and so I'll make the changes as fast as I can and get right back to you.
Use that chat GPT. You'll be back to me in an hour.
Yeah, I'm gonna use that too, but you give me things that the chat GP won't pick up, but I will add,
I hope so.
yeah,
Otherwise, I've just been replaced by AI. So,
exactly. Okay,
all
Ken.
right, I'm going to stop recording. Just hang on a
Okay.
second, okay?